Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. I really need to change that intro because, again, we got another bestseller, at least in the pre-orders right now. You want to make sure you get yours at buildingbread.com/blueprint. We will be having a book signing in Tulsa, Oklahoma. We'll actually be having several, so stay tuned for details. I can tell you now with confidence, I will have 25 copies that will be autographed in Tulsa, Oklahoma right on the 18th. Now we're trying to get as many as we can because I know there's going to be a lot of people that are going to want an autographed copy. But if you're in Tulsa, you are lucky because I will be in Tulsa a few times over the next month and I will bring as many as I can. So I will release tickets for those to guarantee that people can get some. We're going to sell out. I'm going to tell you that now. So you want to be first in line once I release those details. How do you get on this detail list? You want to make sure you're on the email list. That's buildingbread.com/free. But while you clicked on the video, we want to talk about inflation. We had an inflation report that was out. It was higher than what we expected. The market didn't like that. And we've been talking about this for quite some time. I even went back through some of my videos. I think on March 26th, we talked about inflation. We talked about what stocks tend to do well. And we were right once again about financials being one of those places. Just the other day, we talked about energy. So I'm going to give you about 4 places that you want to look to start investing if this inflation thing starts to pick up a lot more. We have seen that tech just ain't the place to be during times like this. And there are always 2 ways that you can look at this. You can say, I'm going to hold on to my big tech names because they're still not going anywhere, which is fair, right? But you don't want to sit here for the next however long this is going to last, a month, a year, 6 months, however long, and say, I'm still going to hold on to this value, which you might want to do, right? But continuously lose money while there are other places in the market that are making money. How can I offset this and lower that risk of just flat out losing until this thing is put to rest? So what do you do? Where do you go? So we'll pull up the whiteboard. There are 4 areas that I look to. Some of these companies we've talked about before. If you want to go back to the entire section on banking or the entire video on banking, you definitely should do that because I went through just not just some of the big banks, but also some regional banks that have done well. And usually when inflation starts to come into play, we know what happens. So for a quick refresher for those that don't know, remember, inflation is when the price of stuff goes up. And when this price of stuff goes up, the Federal Reserve makes a move called raising interest rates. This makes things more expensive. It slows people down from spending. However, it does have an impact, particularly in the financial markets. When interest rates go up, people leave the stock market. They say, this is not great for the stock market. Stock market tends to take a dip, but not for all companies. And they go into bonds, savings accounts, and things like that. But as money flows, there's always an opportunity for investors. So let's go ahead and jump into some of the companies and some of the sectors that you might want to pay attention to as this inflation fear really grows. Again, we've known about this for a while, right? We've been talking about this for a while, but now we're really getting some evidence for it that may cause for some action. So let me pull this up real quick and you should be able to see the whiteboard now. And then we're going to kind of sketch out some ideas. Now, this is not a comprehensive list of every company that I'm looking at in every sector in the world that benefits from higher interest rates or the threat of higher interest rates, which we use as pretty much inflation. However, it's again something that you do want to pay attention to. And the way I would use this list, I want to be very upfront in doing this, is use this list, look at some of the companies, but also look at its competitors. So for example, I'll tell you, if I put a bank stock up here, let's say JP Morgan, that means look at JP Morgan, look at regional banks, look at Goldman Sachs, Morgan Stanley, and everything else in that space to find the best one for you. So this is not, these are my top stocks. These are the areas and stocks like this that I would look into, because again, not every stock is going to perform in the exact same way. So I just want to use this as a starter list for you to go and find other companies that do very similar to it. And then I also have a very, very big red flag that you want to look out for one of these industries as well. All right, so the first one that you want to pay attention to is, wait for it, banks. Banks tend to do pretty well during inflationary times or when interest rates are rising because they get to charge more money, right? That's one way that they make money is by charging you an interest rate on your loan, on your credit card. When interest rates go up, those interest rates rise too. But also when interest rates rise across the board, your savings interest rate rises, which incentivizes some people to say, look, well, I put money in the stock market. Maybe I was trying to get a dividend stock. Well, I'm just take this and put it in a savings because now I'm getting paid more in my savings account. That means that's more money for the bank to loan out, and it helps out banks. So companies that you want to look at or similar to is Goldman Sachs, and then also those regional banks. So it's not just Goldman. I'm not saying this is the best one out there. I'm saying start there and look around and see what else comes up. So maybe a Goldman, maybe a JP Morgan, and then again, regional banks. Regional banks. Now, generally, regional banks can be a better growth factor because if you're like a Bank of America or JP Morgan, you can only get but so much bigger. But these regional banks have a lot of opportunity to expand. They usually offer a lot better rates and things for people in their region. So I would really dig deep and see what regional banks are out there that might be a good buy. Again, if you go back to our bank video about a month and some change ago, I went through like 3 or 4 of them. So you want to go back and check that. So banks, that's the first spot that I would look at because this is super easy. We also know that, again, another reason why I like the banks is because as things are opening up, as people get back to work, the losses that banks had to take on because people couldn't pay their mortgages, they couldn't pay their credit card bills, they couldn't pay a lot of things because they didn't have income, unfortunately. Well, now they are, that lowers that loss. When you lower your losses, you usually increase your profits. So it should be beneficial for banks as well. Other places that you should be looking into, which it didn't immediately pop until I read more into it, is brokerage firms. And that's something like SCHW, Charles Schwab. Again, because people are shifting their money around, we have a lot of apps out there right now that allow you to buy whatever stock or whatever coin you can, right? You don't yet have too many apps where bonds become more attractive. And as interest rates rise, bonds pay more. Bonds are considered to be safer, very stable payments. And if this is the case, if interest rates rise, people are going to flood the bond market. Or where do you get bonds? You're not going to get them on Robinhood in most cases. You're not going to get them on public in most cases. You can get them at places like Charles Schwab and others. Now, do you want to buy an individual bond? That's a whole story for another day. The answer is probably no. However, places like Schwab, places like I'm pulling a list on the side here. TD, like if you can find the symbol for that one, I couldn't find it earlier. But a lot of these brokerage firms, E-Trade could be another one. If they are public, you want to check them out and see if that's a place that you want to invest. Again, these brokerage companies tend to do well. They likely are going to do well anyway because we saw a lot of people flood the market because they want to invest more, and I think that's going to be something that's going to continue. So I think it's a good place in either case, but in the case of inflation and higher rates, that's a place that you might want to consider. Another place, consumer staples. Consumer staples. Now, consumer staples, this is a place that makes it easy for someone, or easier rather, for someone to, now I wouldn't say jack up the price, but to raise prices on consumers, really just pass that cost off. I brought up the example of I think Kroger, which has a very, very thin margin and might not be the best place to put your money right now. However, a place like Costco might be. I think there's actually a better spot that you could go for, and that's something like Target. Now, some people could say Target is consumer discretionary, meaning you don't have to spend that money. You can. A lot of us like Target, just kind of go because we want to be fancy, but they also sell groceries and stuff you actually need. So I put it where I want to put it, but people can pick at it all you want. However, Target is actually up pretty big this year. Let me double check that for you real quick. So year to date, we've got Target up 18.53% compared to the S&P 500 at just 10.5, so higher than the market. Now, Costco is not nearly as good as what Costco was last year. They're up just 0.37%. Now, I think Costco has a little bit more headway. I don't think Costco is over and done with. Now, I do own Costco. I don't own Target. Target is on my watch list on public, so I might be moving into Target. We'll see. But I'm not letting go of Costco, at least not right now. But it's easier for Costco to say, look, this item was $9.99. Now it's $10.50 because inflation, and you have to buy it because you got to eat. It's easy for them to just flip the switch and pass that cost off. The other good thing about Costco too is you got a membership. You're not going nowhere. So that their profit is kind of locked in, so they're kind of protected in that space. So we'll see where they go. Not a guarantee right now. If I'm looking to make the most money, I'm probably going to lean more towards a Target. But again, based on how we're using this list, you want to look at Costco and Target and Kroger and Walmart and everything else that's going to be in that space to see which one is going to be the best for you. These are just stems. These are just places for you to start your research. I want to do maybe some comparison videos. I know someone asked about AMD and some other tech companies. I want to get to those, but I'm trying to address the big news as stuff is coming out, because that's what people share the video for. That's what you like the video for. Take your time out, hit the like button, subscribe, all those things. All right, so our fourth and final area that you want to look into, this is energy. We had talked a little bit about energy the other day, and I will put this here. Now, the first one that comes to mind is ExxonMobil. Now, I know some people are going to look at me and say, ExxonMobil, that ain't the place that I want to be. I'm more of a green energy person. I don't want to invest in a company that's like killing us all. Totally fair. When I think energy, is just the first biggest company I think about. Okay. So it's not the company I'm telling you that you absolutely have to invest in. I'm not saying that at all. I'm saying start there, see what else comes up as you go through your research, and see what you like and see what you don't like. Okay, so there you go. We do know Exxon was up at least the other day, up close to 40% year to date, which again, S&P 500, 10.5. You got ExxonMobil, 46.99%. Goldman Sachs, we mentioned earlier, up 34%. And then Target at 18%. So, these are doing better than the market, but again, this is just a place for you to start. Now, immediately, and someone asked me this on public too, well, I really don't feel great about investing in an ExxonMobil. Are there any green companies or any like wind energy, solar energy, electric energy, any other places that I could invest and probably see a decent profit from? If energy goes up, is there a place I would look towards? The answer is likely yes, but again, this is a place for you to start your research, because here's the problem. A company like Tesla, for some, depending on who you ask, can fall into that energy category. That ain't the place you want to be right now. Tesla is down significantly, right? A place like Plug, they do, in my view, qualify because they make hydrogen power batteries or whatever, right? They fall into the energy category, but they haven't done well. So when you look at energy, you want to be very, very careful. Something like Exxon, maybe even a Chevron, they've been well, maybe they'll continue to do so, but you do want to be careful and don't just look at energy and just shoot for wind farms, shoot for solar, shoot for hydrogen, and just think everything's going to be okay. You really want to be careful. Now, generally, it's usually the oil companies, but it doesn't always have to be that way. So you do want to be careful as you're looking into the energy sector to find out what works and what doesn't. Now, over the next few days, I'm going to go through and see what I like. And as I learn, I'll let y'all know. But generally, over the past, I would say since like 1970s or so, these are the areas that tend to do best when we have the threat of higher inflation and higher interest rates, and we actually do get higher inflation rates. Another bank I'll throw out here too, you can do Capital One. Now, if you were in my class, you know why we brought up Capital One the other day. So that's just another place for you to look. And then again, you want to start at one of the companies you see on the screen and just branch out, keep researching, and see what fits best for you. But these are the 4 areas that tend to do well when we start to see inflation, when we start to hear about inflation, and when you start to hear inflation, you start to hear a hike in interest rates. If that were to occur, that is going to affect the market, and it's going to affect us all, some positively, some negatively. Again, we did a video on that a while back on inflation. So we've seen this threat out there for a while. We got a little bit of confirmation. Remember, it's also something we expected, because when you flood the market with money, not just stimulus checks, but lower interest rates and all of the stimulus and stuff we're trying to do, potential packages for what was it? For all the COVID packages, potential infrastructure plan. When you do that, you are flooding the market or just flooding the states with money, because if I have to pay you, right, to build a bridge, and I have to give you money for that, you can go and spend that money, and that's going to make things more expensive, and it's going to help companies. It does a lot of stuff. So it's not all bad. It is not all bad. However, the market reacts to it. So in a case like this, where I know banks are going to be good, brokerage energy, things like that. And I know technology is not. What a lot of people are doing is saying, I'm going to sell off a lot of my tech stocks. I'm going to go to banks. I'm going to sell off a lot of my tech stocks. I'm going to go to Bitcoin, Ethereum, and whatever else is out there. I'm going to sell off all this. I'm just going to cash and wait. So right now, it's really a terrible scenario because it's in a bad spot. So remember, we already talked about from, I keep forgetting the months, from this section of the year tends not to be great until like October through April. So May, from May to September, this isn't the best time, when you put 2 and 2 together. So like 2.5%, y'all can go back and watch the video that sell in May and go away. So this tends to be like the really dry season for investing. And then from October to April, that's when the market really kind of takes off. When you compare those two periods, you invest the whole time, you're gonna be all right. So when you have the lowest growth generator, I don't know how do you say that, you're in the season of the year where the market doesn't grow as much. That's number one. Then you got a possible threat of inflation and higher interest rates. That's number two. You got those two things going at you at the same time. Is just a real bad situation for especially tech companies, but just for investors in general. So you got to find a way to diversify, make some adjustments, and move forward. So those are the areas. I'll pull it up one more time. I think we had energy. Here you go. So we get energy, brokerage, consumer, and we go in order. So brokerage, banks, brokerage, consumer staples, and energy. This is just a place for you to start your research and then kind of move forward. Again, as we go forward, I'll do some comparisons, tell you what I'm looking at. I did add some stuff on public yesterday, so I added Exxon to my list. I don't know if I'm investing in it. It caught my eye, right? And then we'll see where I want to go from there. I'm definitely going to take a look at Charles Schwab. I've already looked at some of the banks. Y'all know I was in a trade for Goldman Sachs. I think I made money on that one. I also had a stop loss on a few of my companies, just transparency, because we talk about this stuff. Etsy was terrible, right? Etsy was going in the right direction, and then something happened and it just crashed, right? So I had a stop loss at 190. I got at 190. A few days later, it went all the way down to 165. I don't know where it is today. GM is the only stock I got left. Hopefully they act right, because they're right on that stop loss level where they're about to be sold out to protect me. And then we did make a profit on another stock. So I'll look at it and we can recap those later. But that's what you want to know. Those are the areas that I would start to look into. I will make my adjustments and changes in June, which ain't but 2 weeks and some change away. All right. So lastly, again, make sure that you hit the share button. Make sure that you also get the book. You can go ahead and pre-order now. The release date is May 18th. You're going to enjoy it. It's rather good and thick, which I am extremely proud of the work that I was able to do, but also the people that reviewed it. We got some great reviews already. And again, look at that picture. Oh, nice picture. One of my friends, Jaron Collins, made the cover for this book. So even better, native Tulsan as well. So make sure you check that out. buildingbread.com/blueprint. Make sure you're on the email list, buildingbread.com/free. And that's it. Talk to you guys later.